Greetings from Philadelphia, Pennsylvania. It is, I don't think I've seen the sun in about 36 hours. Gotta love the weather. For those of you not familiar with me, my name is Rob Valencius. I'm the National Agent Trainer here at Pinnacle Financial Services. And, we're gonna be going over some pretty cool stuff about long-term care. And I know, I guess the stigma, and it's funny, we were just chatting about this, me and Lawrence here, that long-term care is difficult, it's going away, yada, yada, yada. And Lawrence, hopefully I say your last name correctly here, Vivencio. He's the Regional Vice President of the Individual Products at National Guardian Life. He's going to be talking to you a little bit today about their products, and I guess to kind of squash some of that stigma against the long-term care products. So, we got a lot of great info that we're going to be packing in here today, and I think we're going to go through this relatively quickly. I'd love to have you guys out of here shortly. So I always like to start these webinars off by talking, from a housekeeping perspective. Everybody will notice you are on listen-only mode. Look, we do that really mainly because I'm sure with COVID-19, everyone's done the webinars where some of the carriers have had, or, some of the other brokers maybe have had their mute off, and you hear garage doors, kids screaming, dogs barking, and it really interrupts the call, makes the call unnecessarily longer than it should be. So we do this to make the call, go smooth and really kind of curtail some of those unnecessary interruptions. Now, that does not mean you can't ask questions. We do have a question box there. You can ask me questions at any time. Now, if I can't answer it straight up, or we don't get to it right away, don't worry. I will try to get the questions over to Lawrence as soon as possible so that we get those answers for you. Now, this is our website. As you can see here, it's pfsinsurance.com. I wanted to start this off by talking a little bit about Pinnacle for those of you that are new, and kind of show you our kind of a quick view of our hub here. Okay, so Pinnacle Financial, we've been around since about 2001. Personally, I've been with the company now, it'll be 6 years next month, and we actually started in the long-term care space. So our principal, Kevin Shields, when he started, he sold long-term care. He knocked on doors for insurance a long time ago, and he worked his way up eventually. We had affiliations with Conseco and American Travelers. If you've been in the business for quite some time, eventually we branched off on our own, and really long-term care was our main product till about 2005 when Medicare Advantage took off, and we decided to begin selling that and kind of never look back. Now, we are a national FMO, NMO, whatever you'd like to call us. And, even though Medicare is something that we talk about a lot, we sell, every product you can think of in the senior space, from dental products to long-term care, annuities, final expense, term, GUL, all of that. All under one roof. We work with well over 140 different carriers here, National Guardian Life being one of them. Great partner with us in many aspects of our other products. So, we're excited to have them here and to go over this stuff. So real quick, I do want to show you guys, we do not like to hide from our agents. So if you go to About, Contact Our Team, we have pictures, extensions, emails, and social media for everybody in our company. And look, we do this because we don't want to hide behind an email address. We don't want to hide behind a gatekeeper or a secretary. We want to be front and center. We want you to be able to find and see who you're doing business with. Typically, around now, I'm in 20 to 30 states across the country, traveling, meeting you guys, shaking hands, talking about products, and really garnering excitement for your sales throughout the year. Unfortunately, COVID-19 has kind of killed us on that. I'm unable to meet people face to face, But we've done a lot more things virtually. We've done a lot more trainings. And I might be biased because I work here, but I think that we've done the most webinar trainings with different topics and unique things that we have available on all of our social media. So also, I always like to point this out, please follow us on our YouTube, LinkedIn, Twitter, Facebook, all of that. We post a lot of our recorded things on there. So even if you can't stay for this whole call, or you miss something, or you want to see some of the other products or other trainings we have a suite of different things that you can go over. Now, real quickly, our health sales team is split up into two teams. We've recently, we continuously grow, so we've recently had some promotions. In this specific area, in this team of three, Jeff Pallow, he was recently promoted to Vice President of Health Sales. So he actually runs our health sales division. James and Marcus are still the directors of sales within this market. We do this specifically because if one of these guys, so if Marcus gets COVID and he's out, or James goes on vacation, you still have somebody else within the market that knows the products just as well for you to be able to talk to. Now, you're always going to have a point of contact here at Pinnacle, but we want you, if you're sitting down with a client, we know time is money. We want you to be able to reach out to somebody and talk to them, okay? So that's important to us. Now, like I said, we have two teams of three, so this is the other team. Now, recently, Nick Pallow was promoted. He is assistant vice president, but he's still within this territory of three. So you do still have all three of those guys within that market space. And then our life annuity and long-term care sales team, which is, is obviously what this call really is about, they're split up more by product line. So you do have Mark and Warren in the office. They handle the life and final expense. You have Will. He's the senior sales director. He deals with a little bit more of the complex life annuity and long-term care. And then recently, Josh Horton, he is within the area as well, but he was promoted to assistant vice president. He actually runs all of the life and annuity division, but he still obviously helps everybody. And I can tell you just out of experience, look, we're all licensed agents here. I've had my license since I started. I know Josh and Will and Warren and Mark have had their licenses for as long as I've known them. So we know what it's like to be an agent, which I think is pretty unique as well. So, don't hesitate to talk to us. I know our owners always willing to put, their money where their mouth is, so to say. So that's my quick 30-second spiel. So I'm going to kick this over. Like I said, when we started the call here, I have Lawrence Vivenjo. He is the regional vice president of individual products at National Guardian Life, and he's got some really great stuff to talk about. And I can't wait to hear what he says about how bad I butchered his name. So you ready over there, Lawrence?
Yes, I am. I'm waiting for that magic button that lets me share my screen. And no, you didn't butcher my name too bad at all. Vivenzio was right on the money.
Awesome. All right. And the presenter is over as we speak. Take it away.
There we go. So you should see an essential LTC slide. Is that right?
You are good to go. Yeah, absolutely.
Beautiful. Well, hey, everybody. I appreciate you taking some time to chat with me a little bit this afternoon about our product. Rob already introduced me, but he was talking about pictures, so I'll throw a mugshot up there because I'm a real human being, too, not hiding behind the email address. If you're reading what's on the slide, I would like to refer to people like me as long-term care lifers. I've literally never done anything professionally other than long-term care planning. I've sold it. I've been in your shoes. I've wholesaled it from an agency perspective. I've been in Rob's shoes. I've now transitioned to the carrier side of the business and all long-term care specific. So when I talk about this product, and really that was the ask today was, hey, come on and tell us why this product's special. What's going on with this product? What are the key features of it? So when I talk about this product and those key features, I like to think I do it from a field perspective. So as I'm talking about this, if you're saying, have thoughts or have questions or, if I'm not digging too much into how to sell a certain thing, type that in. And Rob, if those are pertinent, feel free to jump in and interrupt whatever I'm saying, because I want to make sure we're talking about what everyone wants to hear. That said, there's really two things I like to accomplish on these calls. And one is not just what are the key features of the product. The other one is I want you to be able to tell the NGL story. Because if you're talking to a consumer, generally, you have to be prepared for those questions of, well, hey, who is NGL? And my nutshell statement is, look, you've got a carrier that's been around for over 110 years with what AM Best considers an excellent rating, and they ended 2019 with roughly $5 billion in consolidated assets. Those are generally the top three concerns you'll get from a consumer, right? Financials, longevity, and ratings. And that addresses all three of them. Sometimes you'll get a follow-up question of, well, hey, how long have they been doing long-term care? And if you're not a long-term care lifer, I have a little bit of a story to tell. And that story has to do with just the industry of long-term care in general, right? So in 2016, NGL sold long-term care insurance for the first time. Doesn't sound like very long. If you don't know the story, that could be viewed as a negative. Here's why it's a really good thing. So think back to the, mid to late 80s, when long-term care was just becoming a popular product for the first time. That isn't all that long ago. So until roughly 2010-ish, when we started getting some real claims data, right, from the companies that have been doing it for years, dating back to the mid to late 80s, it really wasn't until very recently, roughly 2010, that as an industry, we got some real claims data where we could stop making pure assumptions, right, and base it on some true data. Because now there was roughly 30 years of experience when those studies happened as an industry to see, okay, well, here's how many people lapse these things, here's how many people use them, here's how long they use them for. So when you hear some negative things about LTC in the press, I think that's some of what was being alluded to earlier, when Rob was saying, hey, let's break this stigma. You hear about these big rate increases. Well, those were the products of yesteryear, when we didn't know how to underwrite them properly. We didn't know what the assumptions were going to look like until we got some real data. We didn't know how to price this thing properly as an industry. So that's why you're seeing some of these big increases on some of these old products. So yes, NGL partnered with an expert administrator who's been doing nothing but long-term care for 30 years, but that gave us over 30 years of experience to leverage and price this thing the right way, underwrite this thing the right way, and be confident in bringing back some really interesting features that this industry hasn't seen in a while. So you're going to see me talking about some really rich features, some really unique built-in features, as well as a competitively priced product on today's marketplace that really allows you to flex and mold this thing into what your client tells you is important to them about their long-term care plan. So that's the NGL story and the NGL delving into long-term care story in a nutshell. And I think it's a really strong one. When I transition to product, I quickly do a bit on availability because that's the first question I always get. The product's available virtually everywhere. The only two exceptions to that are New York and Montana. Yes, we are working on both. We're hopeful we can have both filed at some point this year, but to be determined. We are available in all those other states. The light blue states are long-term care partnership states. The dark blue states are not. If you don't know what that means, we have to have a little bit of an LTC 101 kind of a conversation, but I could do a whole webinar on the long-term care partnership. So please try not to inundate questions on this call with regard to, hey, what's long-term care partnership? I can follow up with you and or Rob after the call and give you some guidance there. So here's what I think is going to tee up most of the rest of our time on this call. And what I think really makes this product something special in the marketplace. Those 5 bullets in black font you're seeing on that screen are the 5 features I'm really going to hone in on here that I think make this product stand out. And I'm going to go through each one of them. So the first one being the joint policy or coverage, it says, with this thing called a shared benefit amount rider, which is a separate third pool of money. So generally, when you sell long-term care insurance, you don't sell a joint policy. We're the only standalone product that functions that way. You usually sell each member of a couple their own policy. So how we work is you have Mr. and Mrs. Prospect, and if you sell them NGL, you are selling one joint policy with a joint premium and a joint waiver of premium. Okay? Now, if you add on our shared benefit amount rider, you have a separate third pool of money. Okay, so let's say, for example, you sell a 3-year benefit period. Each one of those blue circles represents a 3-year benefit period. So Mr. Insured has one, Mrs. Insured has one. Under no circumstance, even at death, will they ever touch each other's pool. But if they run out of their own pool, they can use that shared pool. So how might this work? Hypothetically, let's say Mr. Insured goes on claim and he uses all of his benefits. What can he do now? Well, those blue arrows represent little bridges into the shared benefit amount. So if he still needs care, he can then use the shared benefit. He could use all of it, but in my example, let's say he uses about 80% of it and then passes away. Well, Mrs. Insured still has all of her benefits left because he can never touch hers. And if she goes on claim and uses all of her benefits, she can then walk across her little bridge, the flashing blue arrow, and use what's left in the shared benefit amount. Why do I take so much time to talk about this? Because it's really unique to the industry. Most carriers, you don't have a third benefit amount. You just have 2 separate policies. And if one uses all of his or her own, you can then use the other person's. But then that other person might not have much left when they need help. So I love this setup because it will never leave that second person hung out to dry, so to speak. Now there's a lot on this next slide. I'm going to compare those 2 setups. Focus on these 2 silver bubbles at the bottom of the slide. That's the difference at policy issue in total benefits between the 3-pool model on the left side, which is us, and the 2 separate policy model, which is the competition. That's not a small number. That's a pretty big difference. And if you can't read the little font on the bottom, this is a 55-year-old couple, and this is plain Jane long-term care. It's straight down the middle. It's a $200 daily benefit, a 3-year benefit period, shared benefits, and 3% compound inflation. Fast forward 30 years, you're talking about like a $500,000 difference in benefits available. So that's why I talk so much about our joint policy with the shared benefits, because I just think it's a tremendous setup. If you're talking about long-term care planning to a couple and you don't bring up NGL, I believe it's a factual statement. Sounds inflammatory, but I think it's a factual statement to say that you're leaving a very compelling option off the table for them. So that's the first thing I wanted to talk about. The next thing I wanted to talk about is the fact that we do have a lifetime unlimited benefit period available. Okay? So if you have somebody who just wants to pay for that ultimate peace of mind and say, look, I want to make sure I never run out of benefits, we have a lifetime benefit period available. To my knowledge, there is no other carrier, traditional long-term care carrier out there offering a lifetime benefit period. Your other choices would be a 2, 3, 4, 5, or 6-year benefit period, with or without that third shared pool on the joint policy. But if you have someone that wants to pay for that ultimate peace of mind, lifetime is available. Premium payment. To my knowledge, we are the only carrier out there offering a single premium payment option on a traditional long-term care product. With that, if you sell the single pay, it is a guaranteed premium. It will never get a rate increase. It is fully paid up on day one. We're never going to ask for another penny. So if you have clients who are concerned about that potential for a rate increase or have heard some of the negative press that long-term care has received because of those old products, say, hey, I've got a way to completely remove that concern. And that's with the single pay. With our 10-year premium payment option, beginning on 4/1 in most states, we just released an enhancement where the 10 pay will also be fully guaranteed and will never get a rate increase and will be paid in full in 10 years. Now, the way it works today in all states and in 13 other jurisdictions on 4/1 that haven't yet approved this, you could get an increase during those 10 years. But once you're paid up in year 10, you are fully paid up and you cannot get one, and we will never ask for another penny. We also have a lifetime premium payment option, which is how most long-term care is sold. But the reason we put these on here is because we wanted you to have some interesting tools on the belt to take out and say, oh, you're concerned about rate increases. I've got some great features to address that concern for you. And then over the last 10 or 15 years, we've been hearing a lot about this popularity of hybrid long-term care products, right, that have benefits at death or even surrender values. We can do that too, but we do it on a traditional long-term care chassis. So some of these things I was just talking about, right, lifetime benefits, guaranteed single pays, death benefits at death if you never need care, sounds a lot like those hybrid or asset-based or linked benefit, whatever lingo you like to use, types of products. But we do it all on a traditional long-term care insurance policy. And we can create that same conversation. Hey, Mr. Client, if you live and need care, there's a long-term care benefit. If you die and you don't, there's money that can go to your beneficiaries. And if you might even think about canceling this policy, I can add a surrender value where you can get up to 80% of your money back. So you have that same conversation where, hey, if you live, you die, or you cancel, there could be a benefit in any of those situations. All on a traditional product called Essential LTC. How do we do it? Return of premium riders. Okay. The first one is called limited return of premium. And what that means is we're going to look at premiums paid. We're going to look at any benefits received as long-term care claims, subtract one from the other. If there's anything left, that money goes to the beneficiary. So isn't that exactly how those linked benefit or hybrid style products work, right? Just that first stack of money is called a death benefit that's reduced every dollar based on long-term care claims. And if anything's left, that money goes to the beneficiary. Pretty straightforward, right? Very similar. And of course, like the true hybrids, if claims are much larger than premiums paid or equal to, then the beneficiary would get nothing. So this is that one return of premium rider that I think makes us very interesting and comparable to the hybrid products. Now there's another one that come 4/1 will only be available in select states. And the reason for that is because it doesn't compare to anything. It's very unique. So we actually removed it from being available because it was sold so infrequently. But in those 13 states, it tells an interesting story, and that is, hey, we'll look at premium, and you know what, regardless of any claims paid, we'll still give that money to the beneficiary as long as the policy is active when you die. So that can be really interesting. It's very expensive. You will not use it frequently, even if you are in one of those states. What I recommend you look at is the limited return of premium rider to compare to those hybrid products. So when do you bring them up? You having the long-term care conversation. What if I die and never need care? If all your objection handling responses don't put that to bed, and he can't get past that what if I never need care conundrum, that's when you bring up the limited return of premium. Then you can say, hey, Mr. Client, whether you need care or you don't, this policy can still provide a benefit if I add this rider. Okay. Now I have two more of these things, and they look just like the two on the screen, but they add a surrender value. Now, if you know much about long-term care industry statistics, next to nobody lapses their long-term care insurance. I'm talking like less than 2% of people, right? So unless it's maybe a large single premium and the person wants some liquidity because they're putting 200 grand into the product, I don't see a big place for surrender value. But it's available as an option. You can add it to the return of premium riders. And as you see on the screen, it grades up to 80% of the premiums paid. So if someone says, hey, I'm putting a lot of money into this thing. If I change my mind in, say, 10 years, I want to be able to get most of my money back. This is a great way for you to bring that up and do that. So that was the first kind of sales idea related to those features that I wanted to talk about. So we fit very well in that traditional long-term care mold. We can be a very interesting option in that asset-based mold as well. The next thing I wanted to bring up, and I'm not going to delve too deeply into this, is I wanted to just mention that we do have a program for the worksite. And it is very compelling if you were talking to the business owner or potentially a key executive, and it'd be a small group of executives. We have a unisex employer group rate class available at all our issue ages. It is one rate class, unisex premium, extremely competitive for couples, simple group approval because we underwrite the individual. So there's no underwriting concession. We're going to underwrite the individual, which keeps minimums low and group approval easy. And one of the biggest plays you have in the worksite is to discuss the tax advantages available. Because long-term care insurance, even if you do add a return of premium rider, the whole thing potentially, depending on the scenario, could be deductible. So we have a great tax summary. You can see small thumbnails of the page there on the screen. If you're talking to a business owner and the business is going to cut the check, you could have some very compelling conversations about taxation there. And the last thing I wanted to talk about is 1035 exchange, because we do accept funds via 1035 exchange. A lot of people don't know you can do this. Well, there was this thing called the Pension Protection Act that was written in 2006, but it didn't go into effect until 2010. And by 2010, there was no one really doing single premium long-term care anymore. Well, now that we're doing it again, we can talk about this again. So in a nutshell, you can take the surrender value from an existing non-qualified tax-deferred annuity or life policy, and that includes the tax-deferred gains, not just the basis or principal that you put into it. You could take all of it if you wanted to and pay for long-term care insurance. The benefits that come out the other end are tax-free. Keep in mind, they never paid gains on the taxes on the gains in the original policy. So you kind of waved your magic wand and turned a potentially taxable asset into tax-free long-term care benefits. Stuff to look out for. Keep in mind, 1035 was designed for non-qualified money. I cannot play with qualified money. So if you have an annuity that was set up as an IRA, I can't play with that because it's qualified. You might run into some hiccups with couples if, say, just the husband has life insurance. Well, I can't 1035 that into joint long-term care because you don't have matching insureds, but I have ideas for you. So if those things come up, talk to Rob, talk to the folks at Pinnacle. I can give you or them both ideas on how to approach a situation. And the last bubble there, keep in mind, if you're doing a 1035 on a single pay basis, that's a guaranteed premium long-term care contract. So how do you have this conversation? And this is not just me saying, oh yeah, I'm the carrier guy who's never sold a policy. I've sold a lot of long-term care, and I watched a lot of advisors have this conversation before I did it myself. This is kind of a culmination of how I've seen people successfully do this. And what you've done at this point is you financially and medically pre-qualified them. You got a good idea of their assets and income and their medical history. And you go here because you've identified something that you think, oh, this could be a potential 1035. Or maybe they told you they want to self-insure. And then you say, look, Mr. Client, I can help you in one of two ways. I can help you transfer the risk of needing care to an insurance company and you pay an ongoing premium for it. or I could help you do exactly what you told me you want to do, which is self-insure. But I could help you self-insure better and longer than you're doing it on your own. Would you mind if we discussed both of these options? Now, what I said sounded very simple, but I told you this was a culmination of me watching a lot of people do this successfully. There was a lot of subtlety in that, because what I basically said was, hey, Mr. Client, I can help you buy traditional long-term care, or I can help you buy a hybrid policy. Are you interested? I didn't say that at all, did I? I didn't use either one of those words that are in quotation marks on your screen. You said you can help, keyword him, in one of two ways. You transfer the risk of potentially needing care. Didn't say he needed care. You said he might need care. But if he did, you can transfer that risk. You pay a premium for it. Then you provided options, because you have a second thing coming here. And you told him you can help, again, him do exactly what he wants to do, but you can help him do it better and longer than he could do it on his own. Now you've really piqued interest. How can he do it better than me? I'm curious. So by the time you say, would you mind if we discuss both of these options, you're generally getting a yes. Here's where you go from here. Look, Mr. Client, you told me about this life insurance policy that you bought 30 years ago before you were retired, the house was paid off, and the kids were through college. Why'd you buy this policy? The answer is generally one of those three things. Well, you no longer need that for the reason you bought it, do you? So that's generally how people self-insure. They use an older policy, and they just say, hey, I'm going to keep that set aside. That's my long-term care plan. But I promised you I could help you do it better and longer than you did it on your own. So I can take that little life insurance sliver, pack it into this thing called a 1035 exchange, and make it a much larger piece of the pie. And if you need care, that whole large piece could be tax-free long-term care reimbursements. If you don't need care, I can return it to that original sliver, and that money goes to your beneficiaries, just like it would have if you left it there and did nothing with it. Or if you change your mind, you might be able to get up to 80% of your money back after 4 years. The response that I saw consumers giving advisors to this presentation was, how come nobody's told me about this? This seems too good to be true. Is this even legal? How do you do it? And the answer to how do you do it is all the stuff we've talked about on this call already. If you live and need care, you can do a joint policy with a shared benefit, or you can do a lifetime benefit period. If you die and you don't, we can return your premium to your beneficiaries. If you even think you might consider canceling this thing, we can build in a surrender value. So this is where I kind of end where I began. I think those are the 5 key features within this product. And this product fits a lot of very interesting situations and is very flexible, very moldable, but can be a tremendous tool on your tool belt to pivot and not have to talk about different carriers, different products. You can talk traditional. You can check a box and flip to hybrid. You could check a box, flip to 1035. Check a different box. You can talk about Worksite and executive carve-out. And when I talk about checking boxes, I've got a tremendous tool available for you, open access. You can just go to that URL and play with our quick quote calculator. Here's what I mean by that. I'm there. This is just an open access website for agent use. I can put in a joint policy. I'm going to put in a couple dates of birth that generate a 55-year-old age, give them our second best rate class. And this thing defaults to pretty standard long-term care. $150 a day, 3-year benefit, 3% compound inflation, shared benefit, and a 90-day elimination period. I just got a quote. What did that take me, about 30 seconds? And on the right side of the screen, it kind of tells you how it works, right? You know, here's one pool, here's the other pool. Either or both of you run out, you have a shared benefit, and here's your annual premium. By the way, it also shows you premiums paid versus benefits, total benefits, the 3 pools added up, at policy issue, then it does the math and does that all the way out to age 85. So look at the value of that thing. You paid in about $100,000. You have 1.2 million in long-term care benefits. Pretty tremendous tool. So I know Rob and the folks at Pinnacle can get that link out to you. It's a great tool. Go on there and play with it. Easiest way out there to run a quote for this product, as well as kind of show you how the policy works and what the value of the ins versus the outs are. So that said, Rob, I'm going to kick it back to you and see if we have any questions or anything anyone else wants me to elaborate on.
You must have explained it pretty well, Lawrence, because I don't have any questions. I think the only question we had was commission related, and I let them know we would get back to them on a one-on-one, because I don't really typically talk too much about the commission side of it. So, yeah, no, we're good. Had a question. What is the 150 or 200 a day? This question's from Mark.
That is the daily benefit amount. So that's the most the plan would pay on any given day in year one. If you had inflation, that amount will increase as time goes on. That is kind of an introductory LTC type of a question. So I'm sorry if that was, I was kind of jumping to assumptions. But if that kind of question is coming up, I'm happy to have more of a how do long-term care policies work type of question to make sure that all these concepts make sense to you. Because that's one of the basic benefit choices is a daily benefit amount, a benefit period, whether or not you want, inflation on the policy. Those are all things we can dig into. And if you feel the need for another call, Rob, just shout, and I'm happy to do that type of call as well.
Well, here's what we can do. We're getting more and more questions now, so we're going to go over those. But real quickly, there is a hand raise button, and if you can't find that, just put a Y or an N. So Y for yes, N for no. Would you be interested in us doing a long-term care 101 with Lawrence here within the next week or two? So if you could put that now, that would benefit me, because obviously you guys we've gotten all yeses.
Okay.
So hey,
well, the
Lawrence,
ask was come on and tell us what's special about the product, but so all this probably made absolutely no sense to everybody, and I want to apologize for that. I don't have a pre-canned kind of LTC 101, but I can speak to it. So, Rob, let's chat after this call and see what we can make happen.
All right, so one of the questions, where can I see the health questions? This one's from Ron.
You can see them on the app, but please don't use that as your gauge for whether or not someone's going to get approved. That's another great thing we can expand on a one-on-one call. If you're not familiar with long-term care underwriting, it's tough. You got to be in pretty good health to get long-term care insurance. People would, when I was selling, would always ask me, "Hey, Lawrence, when's the right time to buy?" And I would give them kind of a salesy non-answer, which I hate doing. But the real answer to that question is, look, if you can afford it and your health is allowing you to buy it today, that's when you should buy it. Because if something happens, you could be uninsurable for the rest of your life.
Awesome.
Okay.
Awesome.
So you've got to be pretty familiar. Leverage our underwriters. They're available to you to do pre-qualifications. But we do have an underwriting guide available that I know Rob and the Pinnacle folks can get to you. But learn to pre-qualify and really dig deep to get anything out of that client's medical history that you can. We even have a form that kind of helps you do that. We call it our pre-qualification form. So that could be something else that Pinnacle provides to everyone on this call if you'd like to get it.
I had another question here from John. He asks, how do you usually sell to groups? Do you have a teaser flyer for the group side of it?
So I don't see our product being a great fit in what most people think of as quote unquote groups. I don't see you walking into, the 3,000 person group and giving the HR person a flyer and them saying, sure, I would love to have this benefit on our platform. Where I see this happening is just when you talk to your clients and you learn what they do, if they own a business or they're an executive within a company, I would begin to have the conversation and say, look, if you're, you own the AC shop down the street and, you and your partner are in this business, you're about to buy this from me anyway. If your business cuts the check, we can have some pretty interesting conversations about some tax benefits here. And I think that's your interlude to potentially a small carve out. But in a nutshell, right, you talk about people in the workplace. Most caregivers today, if you start looking into the stats on this, are trying to hold a job. And many of them have to change their work accommodations to take care of their mom, their dad, or whoever it might be. So from the business's perspective, if we can get this to the employees and their eligible family members while they're still healthy enough to get it, this will help provide the benefits and the help that the family members need when they do need care to keep that employee focused at work, rather than having to potentially leave, which happens, to take care of that family member. So if you are trying to talk to just that group or hiring manager or HR person or whatever, or the benefits person there, that's part of the conversation. And again, that's a much wider conversation. I just wanted you, for purposes of this call, to know it was available should you run into some of these situations.
Awesome. Question here from Jamie. Do you have an age limit on the single pay or 10 pay premium long-term care plan?
No. All issue ages, both of those features are available. Issue ages are age nearest 40 to 79.
Awesome. Hopefully that takes care of your question there, Jamie. Another question from Roy. Do they need to take a physical?
Generally not, no. Long-term care underwriting, at least for us, is typically medical records. We pull a drug report, and we'll also order an interview. That interview for most ages is by phone, unless we have cause to do it in person, which we generally don't. But ages 66 and up, that interview is in person, but it's not a full-blown physical. I mean, the nurse might take their blood pressure, height, and weight, but there's no labs or anything. It's more of just an assessment of their cognitive and functional abilities, as well as their living areas. But we could order a paramed with labs, but it's exceedingly rare that will happen. That generally only happens if somebody has a lack of a medical record in place.
Gotcha. So it's like a case by case, which makes sense.
Yes, and it's really rare. It's, for that guy who says, hey, I haven't been to the doctor in 10 years. If he submits an app, we're probably ordering a paramed because we don't have any medical records to go off of.
Makes sense. Got to protect both sides of the fence there. So,
right.
Question here: what is the highest maximum benefit you allow per day?
We will go up to $300 per day.
Okay, got you there. And last question I have, unless something pops in last minute, will this pay any caretaker? Example, facility, CNA, family, etc.
So most long-term care policies don't pay for informal caregivers, especially those that are family members. We do not pay family members or informal caregivers. We would ask that they use a home health agency. If one's not available, they could use an independent care provider, but if one is available, we want you to use the agency, just for reasons of historical fraud with other carriers and independent providers and et cetera. And it also does pay for adult daycare, assisted living, or nursing facilities. But the criteria to be benefit eligible is also something that we will delve into more deeply on a one-on-one type call, because you would need to know what those benefit triggers are based on the federal standards set for long-term care. And in a nutshell, that is, you need help with at least 2 of 6 daily living activities for at least 90 days, or you have a severe cognitive impairment where you're a threat to your own well-being or those around you. So those are the 2 things that would make you benefit eligible, and where you receive your care would be based on your doctor's plan of care. But no, we do not pay for informal caregivers, especially family members.
Cool. Awesome. Well, that's it for questions. That's great interaction. I really like it. One last one popped in here. Is this very competitive for single life cases? The question was.
Yes. And you know what, I did forget to mention that. Yes, I talk a lot about the joints and how well we do with the joints, but we've got some great rates for singles as well. So if you put us up next to the, competition out there, I think you'll be very pleased with the outcomes.
Awesome. So we're going to end that here, guys. I want to thank you, Lawrence. I know, it takes a lot of, to take an hour or two out of your day and put together this material. We here at Pinnacle appreciate it. I'm sure everybody that was on the call appreciates it as well. I just wanted to say thank you guys for taking the time out of your day. Time is money in this business. I know you guys don't make salary, so it's good that you took the time out. I think there was a lot of great info. I'm a little new to the long-term care side, so I learned some stuff. And to be honest, I'll be looking forward to the long-term care 101. So great call today, guys. Thank you, everybody. And hey, if you're in the Northeast dealing with all this rain that I am, drive safe. And until next time. Thanks, everybody.